Welcome back to the Eggs Invest podcast, your friendly guide to navigating property investment with confidence, clarity, and a cup of coffee. Today, we're diving into Module 3 of our commercial real estate series, Market Trends and Economic Factors. Now, if you've ever asked yourself, is this a good time to invest in commercial property? Or what really drives the rise and fall of property values? This episode is for you. Understanding the bigger picture, the market landscape, and the economic forces at play is what separates the reactive investor from the strategic one. So let's start with an overview of the UK commercial real estate market as it stands today. UK commercial real estate market overview. The UK has always been a heavyweight in global property investment, with London often ranked among the top investment destinations in the world. But the commercial market is far more than glass skyscrapers in the capital. Today, we're seeing a real shift. Post-pandemic recovery, Brexit adjustments, interest rate hikes, inflation, and the move toward remote work have all reshaped the landscape, and savvy investors are paying close attention. Here are a few major trends shaping the current market. Office spaces are evolving. The hybrid work model is here to stay. We're seeing demand shift from large, traditional offices to smaller, flexible spaces with top-notch amenities. Landlords are repurposing old buildings into co-working hubs, wellness-friendly workspaces, and mixed-use schemes. Retail is being redefined. While some high streets have struggled, retail isn't dead, it's just changing. Essential services, convenience retail, and experiential shopping are bouncing back strong. Investors are shifting focus to community-driven retail spaces that offer things you can't get online. Industrial and logistics are booming. This sector is currently the crown jewel of UK commercial real estate. Thanks to e-commerce growth and supply chain reorganization, demand for warehouse space is sky-high, especially near major transport routes in the Midlands and North. Regional growth, London remains dominant, but cities like Manchester, Birmingham, Leeds, and Bristol are seeing record levels of investment due to affordability, regeneration projects, and improved infrastructure. ESG and sustainability. Green buildings aren't just a trend, they are becoming a requirement. Tenants and investors alike are prioritizing energy efficiency, and buildings that don't meet environmental standards are at risk of becoming obsolete, what we call stranded assets. So, what does this mean for you as an investor? The market is dynamic, no doubt, but it's also full of opportunity if you know where to look and how to adapt. Economic influences on property investment. Let's shift gears now and talk about the economic forces that can make or break your investment strategy. Commercial real estate doesn't exist in a vacuum. It reacts to the broader economic environment, sometimes slowly, but always surely. Here are the key economic indicators and forces you need to watch. Interest rates, perhaps the biggest factor. When rates are low, borrowing is cheaper, meaning more investors enter the market and prices go up. When rates rise, financing becomes more expensive, and both demand and prices can cool down. In 2024 to 2025, the Bank of England's decisions on rates are crucial to watch. Inflation can erode real returns, but it can also drive rental growth, especially with inflation-linked leases. Property can be a hedge against inflation, but only if it's structured right. GDP growth and business confidence. When the economy is growing, businesses expand, hire more people, and lease more space, which drives demand for offices, retail units, and industrial sites. During downturns, companies downsize and vacancy rates can rise. Employment rates. High employment means more consumer spending and retail demand. It also reflects broader economic health, which impacts everything from office occupancy to industrial demand. Government policy and incentives, tax breaks, enterprise zones, planning reforms, all of these can spur development and increase investment appeal in certain regions or sectors. For instance, free ports and investment zones across the UK offer enhanced tax benefits and simplified planning rules. Global events, geopolitical tensions, pandemics, and global supply chain issues can all affect investor sentiment and market performance, especially in logistics and retail. Remember how COVID transformed our understanding of essential real estate. These shocks matter. So here's the bottom line. You can't control the economy, but you can prepare for it. Have a checkmark, pay attention to interest rates and inflation. Have a checkmark, follow regional development plans and government incentives. Have a checkmark, monitor supply and demand in the asset class you're investing in. Have a checkmark, stay informed, but don't get paralyzed by headlines. The savvy commercial investor learns to ride the wave, not get swept away by it. If you found this episode valuable, please leave us a review or share it with someone looking to make smarter property moves. I'm Anna, and this has been the Eggs Invest podcast, empowering you to hatch better investment decisions, one episode at a time. Hi, and thanks for tuning into the Eggs Invest podcast, your go-to space for everything property-related and making sharp, strategic investment choices. I'm Anna, your host, and today we're diving into a powerful topic that could take your portfolio to the next level: commercial real estate. Now, if you've been in the residential game, maybe you've done a few buy-to-lets, HMOs, or even a flip or two. Commercial property might sound like a totally different beast. And honestly, it kind of is. But once you understand how it works, you'll see it can actually offer some really exciting benefits. Things like longer-term tenants, higher rental income, and the chance to scale your investments in a big way. So first things first, what is commercial real estate? In simple terms, it's property that's used for business. That could be an office building, a high street shop, a warehouse, a restaurant, or even one of those trendy co-working spaces. Basically, any space where a business operates. And that's one of the biggest differences from residential. In commercial real estate, your tenants aren't families or flatmates, they are businesses. Which means the way the lease works, how you earn your income, and even how the property is valued, all of that is different. Here's a key thing to know. Commercial properties are usually valued based on the income they bring in, not just what similar properties sold for. So if your building has solid tenants paying good rent, the property is worth more. And if you can improve it, maybe upgrade the space or attract better tenants, you're not just earning more monthly cash flow, you're also increasing the property's value. Pretty powerful, right? Another big plus, lease length. In residential, a tenancy might be 6 or 12 months. In commercial, you could have a tenant locked in for 5, 10, even 15 years, often with built-in rent increases. That kind of stability makes a huge difference. Now let's quickly run through the main types of commercial property, just to give you an idea of the landscape. You've got offices, from small setups above shops to full-on city center buildings. Retail spaces, like high street stores, shopping centers, or retail parks. Industrial and logistics units, factories, warehouses, distribution hubs, especially booming with all the online shopping we do. And then there's mixed-use properties, which might combine, say, a shop on the ground floor with offices or flats above. We'll dig into each of these in more detail in the next episode. For now, just know there's a lot of variety, and with that comes a lot of opportunity. So, why should you even consider commercial property? Let me give you 5 solid reasons that experienced investors often talk about. First, higher returns. In general, commercial properties tend to offer better yields than residential. While a decent buy-to-let might give you 4 to 6%, a well-located commercial property could easily return 8 to 10% or more. Second, longer leases. Businesses usually stick around longer than tenants in a flat, which means fewer void periods and more predictable income. Third, triple net leases. This is a biggie. In many commercial leases, the tenant pays not just the rent, but also things like insurance, maintenance, and business rates. That means fewer expenses for you and more money staying in your pocket. Fourth, diversification. If you're already in residential, adding commercial gives you a way to spread your risk. Residential and commercial markets don't always move in the same direction, so it's a great way to balance things out. And fifth, value adding. With commercial property, you often have room to be creative. Maybe you renovate a tired unit, repurpose a space for a new business type, or improve the energy efficiency, all of which can boost income and property value. Of course, like any investment, commercial real estate comes with challenges. It can be more expensive to get into. Finance works a bit differently, and it can take longer to fill vacancies. But if you do your homework and get the right support, those challenges can be managed. In fact, a lot of the most successful property investors in the UK say commercial property was the turning point that helped them go from small-time landlord to building real, lasting wealth. And that's what this podcast and the full course is here to help you do. Whether you're thinking about your first small retail unit, looking at an office conversion, or considering a logistics site near a major motorway, you're in the right place. All right, that's it for today's episode, a big picture intro to commercial real estate investing. In the next one, we'll look at the different types of commercial properties more closely, so you can start figuring out which one suits your goals, your budget, and your strategy. Thanks for tuning in. I'll catch you in the next episode.